Investing in stocks versus betting on sports, a long-term game. The stock market and sports betting might seem like similar beasts. They both involve risk, the possibility of reward, the sweet thrill of victory, and the bitter taste of defeat. But that's where the similarities largely end. Let's break it down. Understanding the nature of the game. When you're putting money down on sports, you're hoping for a specific outcome. It's binary. A team wins or they lose. You cash in or you don't. It's a short-lived thrill, often decided within hours. However, when you're purchasing stocks, you're buying a piece of a company. You're becoming a part owner. You have a vested interest in the success of the business over the long haul, not just during a single game or season. Risk versus reward. Sports betting is high risk. There's a reason Vegas has all those nifty fountains. They didn't pay for them by losing bets. The odds are mathematically stacked against you over time, and you're not in control. Injuries, weather, a bad call, a million little variables that you can't predict can sway that outcome. With stocks, you're facing risks too, sure. But it's a different kind of risk, one that can be mitigated with strategy and research. Companies provide annual reports, they make announcements, and they operate in an economic context you can study and understand. The power of diversification. Diversify in sports betting, and you might minimize some risk, but you're likely just spraying your cash down the drain slower and in more directions. The stock market, however, is built for diversification. You can invest in various economic sectors in companies large and small, in domestic and international markets. If one stock tanks, others can balance it out. It's all about that long-term stability that paying attention and spreading your risk around can provide. Compound interest and growth. Sports betting is a one-off deal. You win, you're up. You lose, you're down. There's no compound interest in betting slips. Winning $100 today doesn't give you $110 to bet with tomorrow. Stocks offer the potential for compound growth. If a company reinvests its profits and grows, your share value potentially increases. Dividends can be reinvested, buying more stock, which might pay more dividends. Einstein called compound interest the eighth wonder of the world for a reason. Leveraging time to your advantage. People who make a living betting on sports are rare creatures, and even they have days when the magic just doesn't happen. Over the long term, the house usually wins. Investing in the stock market takes a long-term perspective. Historically, despite downturns and dips, the overall trajectory of the stock market is upward. Given time, investments can recover from downturns. Patience tends to be rewarded. A seat at the table. When you bet on sports, you're an outsider putting money on an event over which you have little real influence. As a shareholder, you're part of the story. You can vote on major decisions, attend annual meetings, and generally have a say, even if it's just a tiny one, in the direction of the business. Investing in stocks isn't guaranteed money in the bank. There's volatility, uncertainty, management changes, market shifts. But if you're in it for the long haul, you play a more predictable game with rules slanted toward the informed and patient investor. From Portland, Oregon, the land of craft beers and food trucks, I'll tell you this. It pays to invest your money where you've got a real stake and a real say, where history is on your side, rather than laying down cash where the only thing for certain is how unpredictable it can be. Choose the long game. Choose wealth building over wealth gambling.